Hello guys, today I just want to share about multi-time frame analysis. I'll be breaking down the process of using various time frames to get a beautiful entry. So let's assume that we are intraday traders. So the time frames that I'm going to be using, it is the 4-hour and the 1 hour as well as the 30 minutes. So these are the three time frames that I'm going to be using. However, if you're a scalper, you can obviously scale down the time frames and choose time frames that suit your style of trading, but you need to keep it in mind that the time frame should be in this order. Should have a high time frame, should have a medium time frame, and then you should have a lower time frame. So let's get into it. What should you be looking for in these various time frames? So here I am on the 4-hour, and if you can see here, we have an interesting move. There are two things that I look for in the high time frame. Firstly, it is the direction. We all know that the direction is all about the trend. So we look for the trend. Where is the market going? Is it going up, or is it going down, or is it going in a range? So we have three possible directions, and these directions are basically gonna influence the decisions that you make as a trader. For an example, in our case here, we can see that the market was a little bit controlled by the sellers. So the initial direction here, the market has been moving in a downtrend. So let's get to the second important aspect in the hard time frame. So keep it in mind that we have two things that we look for. So firstly, the direction, and then secondly, we look at the key level. So the key level, it's all about the support and the resistance, or the supply and demand. So it's where the market was held for a long period of time, or where the market have began a major move. In this scenario, we have two interesting levels. The first one is there all the way down there, which is more like some kind of support, and then the second one, it is that level all the way there, which is some kind of resistance. We are paying attention to this level because that's where the sellers gave us this very huge move. So we cannot overlook that level. It is very, very significant. The sellers gave us this major move from that level. And it is also a level where the buyers pushed. It is an impulsive wave of the buyers from a breakout of the initial flow. So it is a very, very important level. That's where the strength of the buyers ended, and that's where a huge move of the sellers resumed, continuing this downward direction. So once you have these two things established, the direction and the key level, then it's easy for you to make other decisions on the lower time frame. Why? Because you know that if you have a direction, for an example, in this case, we have a downtrend. So if we have a downtrend, we know that the sellers are a little bit stronger. So it's the sellers which are stronger. And then if the sellers are stronger, it means that we are looking for some kind of a good selling opportunity. But then the key level might contradict this scenario. For example, here we know that the key level at the moment, the price is on the support. So what does it mean? It means that it's likely that the price is going to go up. So when price is on the support level, it's likely that it's going to go up. So now we have these two conclusions that, initially the sellers were strong. However, the price is on the support. So we need more information for us to make decisions. However, before we go to the medium time frame, you can kind of make some better conclusions by observing the waves or the momentum of the price. So just pay attention whatever I'm doing here on the higher time frame. I haven't touched any other time frame yet. So you can observe the momentum here. For an example, we can see that it was the seller's market initially, and then the buyers, they were able to be stronger and gave us a breakout and went all the way above. And then now the sellers pushed. However, when the sellers pushed, they didn't break below their previous low. So it means that the sellers, they are not that much strong compared to the buyers, because the buyers, they are still preventing them. Look at this. See this impulsive move. Where this impulsive move began, it marks the buyer's territory, because this is the move which stopped this trade, which stopped this aggressive flow. So all the way from here going above, it is kind of buyer's territory, because that's where they began the move which destroyed the sellers. So for the fact that the sellers are struggling here, it means that the buyers, or the market, is in favor of the buyers at this moment. Let's keep that in mind as I go to the smaller time frame. So when I go now to the medium time frame, the 1 hour, I'm just going to clear everything. When I go to the 1 hour, my main purpose, it is to find clarity on where I am gonna execute my trade. Remember, I've made all the conclusions on the high time frame that it's likely that the buyers, they are still in power because the sellers are struggling to break below this area, which is the buyer's territory. So now on the medium time frame, I'm there to look for possible entry places or some kind of pattern that will give me a beautiful entry. So there isn't much other than a range that I'm seeing here. So now we go into the patterns that are inside the major pattern. So what I can see here is just nothing less than a range. So it's some kind of a range, some kind of a structure, and we know that if we see something like a range, something like this, we know that we are looking for one thing, a breakout, and obviously we anticipated that the breakout is going to happen on the upper side. However, we cannot clearly see the highs here at the 1 hour time frame. That's where the lowest time frame comes in. When you can't see the patterns on the 1 hour, that's where you go now to your smallest time frame. You don't just go to your smallest time frame, you go there only when you don't see a clear pattern on the 1 hour or on your medium time frame. So when we come now into this 30-minute time frame, we can see that now we can see a bit of some kind of highs and lows in this range. So it's easy for us to make decisions on this range because we can even observe the momentum in this particular range. We can easily see that here was the recent low and here is the next major low. Okay, the lows, they're becoming a little bit higher, but however on the upper side it is still just plain, there is nothing happening. So we're still waiting, and it would be easy for us to say breakout and even observe a retest. However, it will be hard to observe those things on a higher time frame. So I hope this is making sense. And if you have indicators, this is where they come in. For an example, if you have a stochastic or an RSI as some kind of a confirmational indicator, this is where they come in. This is where you observe the indicators. This is where you find confirmations and all the other stuff. However, it feels like I say however a lot. I need to find better words. However, it doesn't mean that these time frames you are bound to them or they are limiting you. You can obviously go beyond them if you don't clearly see or clearly understand what is happening, because price action is all about understanding the structure. So if you don't understand what is happening here, you are free to just jump on and just steal from another time frame and try to just understand, but don't dwell on that particular time frame. Just go there to grab some understanding and try to find a beautiful entry. I'm not gonna make this long. I'm just gonna keep it short and leave it here. Thank you guys for watching.